Good morning, everybody. Welcome. My name is Nico, and this is the daily trading session. We are currently 10 minutes into the UK opening session, past the UK opening, and we're going to be looking at some charts. We're going to be doing some trades, and as we go along, I'm going to be explaining to you guys what I'm doing, what I'm looking for. Um, if you've been following the daily videos that I've been putting out, you will notice that every day is basically the same. I'm doing this because I really want you guys to understand that trading is not the same every day. It doesn't matter what strategy you're using. You will have some days where you get a lot of entries and it's good days. Some days you won't get a lot of entries, but you have to take what the market gives you. We cannot force our trades, and if you do not have the discipline and self-control to really sit and wait on the slow days, it's best to close your platform, go do something else, come back at a later time to see if the conditions has changed and that your strategy has started firing a bit more often. I'm going to be using three strategies, same as I use every day. Next week. I'll start introducing a couple of new strategies that you guys can get used to. But as always, whenever you find a new strategy, even if this is the first time you're watching this, and you want to try out one of these strategies, make sure you understand the parameters of each strategy, and please just test this on a demo account first. Never take a new strategy that you're unfamiliar with and just jump into your live account. Most strategies require a proper understanding, all strategies require a proper understanding of the parameters of the strategy, and then you actually have to get familiar with it, and that's what demo accounts are for. If you just jump into a live account with a brand new strategy and you don't quite understand and you're not familiar with it, you're going to end up taking trades outside of the parameters of the strategy, and this will obviously result in more losses. So you're going to get discouraged, and you're going to throw the strategy away, and you're going to continue looking for a strategy, that golden strategy that's going to give you the perfect trading system, and it doesn't exist. We're going to have some losses. It's normal. It's part of any strategy. So yeah, please guys, if you're trying a new strategy, if one of these strats are new to you, or one of the strategies that I'm going to start introducing next week, if those are new to you, I have used them. The three strategies we're going to use today is my three core strategies. I use them on a daily basis, but like I said, some days they're performing great, some days I'm not getting a lot of entries, and those days, if you don't have the discipline, just walk away and go do something else, come back later, or just accept that you're not getting good strategies. But we're not going to be forcing trades. We're going to be patient. Yeah, it's important that everybody understands that this is how trading goes. It's never the same. No day will be the same as the previous. Okay, so that being said, let's head on over to the charts and see if we can hook some trades. You guys will notice, let's just make this big. Okay, so on my chart, I've got three moving averages. It is a 50, a 100, and a 200 moving average. These are used as dynamic support and resistance areas. I've got the ADX, I've got the stochastic, and the RSI. These are all set to default values. There's no need to change them. They're perfect as they are. And we're going to be using different types of, we're going to be using all these indicators in different ways to see, how do I put this? We're going to use them to extrapolate movement data from the current chart. Right, so what are we going to be using? First off, we're going to be using divergence. Divergence is something that happens on corrections or at the ends of trends. If you do not have a clear understanding of exactly what divergence is, I suggest you guys go to Baby Pips, do a search for divergence on their website. They've got awesome explanations. They cover both the normal or regular divergence and the hidden divergences. You can study that a bit, have a look at it until you understand it. I will be explaining which divergences I'm using to take entries when they form, but I'm not going to be explaining divergence as a concept. Secondly, we're going to look for fast and hollow moves. For this we will use the ADX. So what's going to happen is that quite often we will see. Let's see if we can find a fairly decent example. This would be an example of the type of trade I would take. We had price coming up quite strongly. It was a sudden move. We had the ADX itself very low, but a very decent DI spike. That's DI spike was like on over 40, and my ADX was on about 19. So the DI spike was at least was more than double what the ADX value is, but price got rejected by the moving average there, the 200, and this would have been a sell trade for me. So I'm going to look for trades like this. I do like it if my DI spikes coincide with a moving average. Let's see if we can get a decent example. So not really a good example because the ADX was coming up really strong. If the ADX is climbing really strongly, it's telling me that there's a lot of strength behind the move. So I'm going to avoid taking reversal trades for a bit until the ADX comes down a bit. I really try to do my reversal trades only at times when the ADX value is really low. It doesn't matter if it's if price is going up or down. ADX, the actual ADX line, the yellow line there, just shows us the strength of the move. Right. So if there's not a lot of strength behind it, I know. And one of my other indicators is telling me that we might get a reversal. I know that it's much more likely that the reversal will take place than it would in a very strong trend. Okay, and lastly, what we're going to do is we're going to look for corrections on a trend. Let's see if we can find a nice one. Where was a nice trend? Okay, so there was a fairly decent trend here. This is a fairly strong trend, and corrections will always take place. Doesn't matter if price is going up or down. It doesn't matter how strong the move is. Price will never just continue to move in a straight line in one direction. We will always get these little pullbacks. It's kind of like price is taking a little bit of a rest before it continues down or up in the direction it was moving. So what I'm going to look for, I'm going to look for areas where we've got rejections, corrections, and these corrections need to take place on or very close to my moving averages, while at the same time the RSI needs to tap the middle line, the 50 line on the RSI and get rejected. Right, so we do wait for the rejection. We want to see if there is a rejection. If there is, we can continue. We can take a trade in the direction of the trend. So this strategy, the RSI strategy, is a bit slow. And those of you that watch the OTC videos will see that it's the same strategy I'm using on OTC on the tick charts, which is where I do switch to tick charts and do 5-second expiries. On a tick chart, it's a really fast strategy. So, but on 10 seconds or 1 minute, it takes a while to give you entries. Secondly, these strategies that I'm using them on a 10-second chart and I'm doing 1 minute expiries. You can, however, use them basically on any time frame. If you're doing, if you want to watch a 1 minute chart, you can do 5 minute expiries. If you want to watch a 5 minute chart, you can maybe do 30 minute or 1 hour expiries. But for signals like from divergence, I do need a few candles for the divergence to play out. So I never trade just one candle when I get divergence. I do need a few candles. That's why my charts are on 10 seconds and I'm doing 1 minute expiry trades. Okay, so let's go through a few charts and let's see if we can find some entries. This might have been actually a good trade that formed here while I was talking. This is exactly what I'm saying. We are in a strong trend down. Although this has been flat, this is not really trending. So I thought for a second I missed the trade, but we're not gonna, it's flat, we wouldn't have considered it anyway. Also, with the RSI strategy, when we're playing the corrections, we're only going to play a correction once, always, right? So once a correction has formed, whether we won or lost the trade, we will wait for price to start making, in this case, new lows, because we're in a downwards trend or a bearish trend. So we will wait for price to start making new lows first, and then the next correction we can, if we are within the parameters of the strategy, we can take another trade. Right, so ADX is picking up speed here. You can see it's climbing, so I've got some strength coming in again. I suspect we're going to see a decent push. Might not. I'm also going to be using, in the same way that I use my moving averages as dynamic support and resistance lines, I will occasionally draw in a support and resistance lines manually, areas that I think is of importance, because quite often I'll get an entry on one of my strategies, but it's not close, or it's not close to the moving averages. But if I go afterwards and draw in some support and resistance lines or some trend lines, I notice that the strategy, the system fired right on one of those support and resistance lines. So I do keep an eye on it. I don't spend too much time drawing in, but we do have a very nice level here, and we know that when a level gets broken, quite often, not always, but often, there will be a retrace to retest that level, and then when the market fails, we can maybe continue trading in that direction. So we had the retest here. Our RSI did not touch the middle line though, so there's no trade there. We do not have any divergence, although actually technically this is hidden bullish divergence, but it's faint. We've got the RSI tapping here. We are within the parameters of our trade. Now we're going to wait to see if the RSI gets rejected off the middle line. If it does, we'll enter a trade. If it does not, okay, so it didn't. In this case, it didn't. So there's no trade for me. And this is why it's really important to wait. If I did jump the gun there and entered early and did not wait for my strategy to give me the signal, this would have been a losing trade. So we really do try to, we want to try to avoid those at all costs. Sometimes your strategy will give you an entry and you will lose a trade regardless of how properly you took it. But these kinds of trades, these kinds of mistakes that could have occurred here if I jumped the gun, those are 100% unnecessary, and it will influence the profitability of your strategy. Right, so we're going to be patient. We're going to wait for entries that fall within the parameters of our strategy, and we're not going to rush. We're not going to be hasty, because that's gonna result in losses for us. Let's see if there's any other assets that's moving nicely. Not really. We do have, not technically, we don't have divergence. It does look like the Australian dollar versus the US dollar is going to be coming down a bit. We'll give it a few minutes, see what it does. But we're just going to have a look at some of the assets. I usually don't like jumping around like this. I like to stay on Euro USD. I really prefer to only trade Euro USD when I'm doing options. There's two reasons for that. The first reason is that I find that when I jump between assets, I tend to get distracted and miss trades, and then I start getting frustrated because I'm missing trades. Whereas if I stay on one asset, I can actually focus on it, and I don't want to kind of like get into the rhythm of the asset. The second reason I like to trade Euro USD only is because it's by far the most traded currency pair on a daily basis. None of the other currency pairs comes close to it. So it's got the most volume, which most of the time also result in the smoothest moves smoothest movements. This does not mean that it never gets volatile, but even in the volatility, there's a lot of structure because there's a lot of volume in the on that asset. That's the reason I prefer to stick to Euro USD exclusively. Okay, so it does look like we're having a change of direction here. We should get about, where are we? About 15 minutes in, and I think we spent about 10 minutes on the chart now, almost 10 minutes probably. These three strategies on a 10-second chart usually, on average, gives me about an entry every 10 minutes. That's the average. So some days more, some days less. Yesterday was a decent day. I got a bunch of entries, kind of like it was kind of stuck to the 1 per 10-minute rule. Let's see if we get some divergence here. If this pulls back, if this does pull back, which it actually might do because we've got a decent DI spike here. I'm not going to play the DI spike though because this is through the moving average, but we might see some divergence forming, although currently I don't think it's going to form anymore. Looks like this trade is gone. We'll wait a bit. Remember also we can, when price breaks as a support or resistance area, it got rejected on the first touch of the 200 moving average, but it came down, made a small correction, and then continued upwards. And now this is breaking through. But I do know that I could expect a possible retracement to come test this area again, right? Doesn't mean it will happen, but I know but I know I have to pay attention because it does often happen. We saw this here. Price came through, broke right through the moving averages here, but it came back for a retest there before it continued upwards, right? So this happens often, not always. And when this does happen, a lot of the times we get a divergence signal. So when we get breaks like this, it's especially if you're using divergence, you should pay some close attention to see what the market is doing. Are we going to do a retrace or a correction? If there is a correction, does it give me a divergence entry? So I was actually sleeping a bit. Yeah, this was a divergence buy. Okay, so we had hidden bullish divergence here that formed. I actually I missed that. One of the drawbacks of talking and explaining stuff while I'm trading is missing trades like this. But we did have some bullish divergence here. This would have been a very good trade. You could have gotten in on this candle here, out on this candle there, because that's when the divergence formed and confirmed for us. We also have it on the RSI, and the RSI is moving upwards again from the middle line. So that would have been actually a good trade. It sucks that I missed it, but it's fine. I think actually we were on a different asset when this formed. Either way, it doesn't matter. Sometimes you're going to mistake in trades, and that's fine. Whether you missed it because you got distracted or you missed it because the setup was borderline on your parameters, like close to being outside of the parameters of whatever strategy you're using, do not be afraid to let a trade go and simply not take it. Sometimes when you're not comfortable with the trade and you leave it, you end up that you would have lost the trade. And if you did take it, no need to take unnecessary risks. We're not going to take trades that isn't good setups. We do have some hidden bullish divergence forming again. I would like to see this come down a bit more though. I really would. This is flattish. Divergence is nice to pick up when market is moving like this. When it's moving like this, I kind of always avoid it because it's from this point it could basically go either way, and there's no way to predict what the market will do. We are only, what we're doing with all three of these strategies, what we're doing is we're basically just following what the market is showing us. We're following something that is happening in the market, but we're not predicting in any way. None of these strategies are actually predicting something that will happen. And it's a very, very important distinction. Um, I see a lot of people, say they can predict the market and whatnot, and it is simply impossible to accurately predict. Most people who trade profitably consistently, even though they might say they're doing predictions, if you go and look at whatever strategy it is that they're using and you go watch how they trade, you will notice that they are actually trading something that's happening in the market, something that the market is showing them. They're not actually predicting price movement and market movement. And for those who want to argue with you, please leave a comment those of you that want to argue with me about this, leave a comment in the description, telling me the closing price an hour after. Let's see, what's the time now? 9:31. So tell me what the price is going to be when with the US open. When the US opens, tell me what the euro price will be. And higher or lower doesn't count. So if you can predict it, predict the closing of the 1 hour candle when the US market opens this afternoon. Right. It's not going to be possible. But we can follow the market. It's actually quite simple to follow it. Once you understand that it's really simple to follow. Not easy. Don't get confused between easy and simple, but it's simple. Okay, so euro is being bleh. That's the best way I can describe it. We are moving upwards down the euro pairs, it seems. Euro GBP doesn't count. Cable does what it does. I don't have anything there. We did form some bearish divergence, but it's too late. Although we are in a strong upwards trend, I'm going to see if the RSI gets rejected here on the middle line, and then I might actually take a buy trade. Let's wait for the candle to close. That was a rejection. I'm going to take a buy here, 1 minute buy, and because this is within the parameters of my strategy, we are close, on or close to the moving average. The RSI did get rejected off the middle line there, and we take the trades that our strategy gives us. You guys will notice also that my expiry time is 1 minute from the time I take the trade. This is one of the reasons I'm trading with pocket option. It's one of the important reasons that my expiry times is 1 minute. Doesn't matter when I take my trade. It's 1 minute from the time I click. Second thing, though, is the very important reason. Secondly, is that there's no delay when I take my trades. My execution of my trades are instant, and that makes a massive difference. If you have delays, especially like I'm trading 10-second charts, if I've got delays on entries, there we go, it's a good trade. If I've got delays on entries, it makes a massive difference between a profitable strategy and a losing strategy. You can use the same strategy, exactly the same. And if you have delays when executing trades, that strategy will be a lot less profitable than when you use it on without any delays on entry. That makes a massive difference. So okay, we had a good trade. We got rewarded for our patience. This is not something I will consider for a trade, though. Right, so this is not within the parameters of our strategy. The parameters are we need to be trending strongly, and this is basically, we had a strong push here, but it basically flatlined. So we're moving within a very tight range here. Let's see, we're moving, staying within that specific range there. Okay, so this is a very tight range. We did get a breakout, but it immediately came back. So this is not a strong trending asset at the moment. So I'm not going to consider taking trades using the RSI on this. I will, however, if I do get an entry, like a decent divergence entry, or if we get a DI spike, that a sharp movement down to this 100 moving average here, and I get a very nice DI minus spike, that's something I will consider trading. But for now, it doesn't look like I'm going to get anything. So we're just going to be patient. That's what trading is. If you're not getting entries on your strategy, sometimes don't think you're doing something wrong. You're not. You're staying with, you stick to your strategy. It's just that some days your strategy is not going to give you a lot of entries. Other days you're going to get a ton of entries. And but don't start messing around when you on the days that you're not getting a lot of entries on your strategy. Um, don't tinker with the strategy. Don't mess with it. It it's it's a strategy that works because you've tested it and you know it's profitable. There's no reason to tinker with it. You just need to accept that today is going to be a slow day for you. So you either have the discipline and patience to wait it out, or you close your charts and you go do something else. Let's see if we got maybe this is coming down a bit. Not really trending though. Um, Euro JPY, we're getting entries. I'm going to stick to Euro USD. It's much easier to. I really get frustrated when I jump around and I get back to an asset and I uh, missed a trade, missed a good setup. That really frustrates me. So I think let's stick to Euro USD and we should get a entry soon. Starting to push up. There's no strength behind this movement yet. So nothing to get excited about. And we also don't have divergence. I know a lot of people at this point will say, but there's hidden divergence there. We got the, they will draw it from that point to that point and then from there to there. But our most recent correction, although it's small, was there. So from this point to this point, and then obviously that point to that point, there was no divergence, right? So always use, only use the last two corrections, your last two lows or your last two highs to look for divergence. Don't spread it across multiple highs or multiple lows. Stick to the most recent two. Because if I put this on a line chart, it will look like that, pull back, and then that. Let's do that actually while we wait. There's nothing getting, not set up now. Where was that? There, yeah, I think. All right, so we had a push down, a push up, and then a push down again. So this was a correction. Okay, so do not skip highs and lows. Divergence only from the two most recent lows or two most recent highs. We're going to stick to that. It's much easier to well, not even I wouldn't say easier, but it's the way it should be done. Let's just want to check something on a trend line here. No, it's kind of close, but not. I had a different image in my mind. So never mind. Okay, so we're getting a DI spike here. DI is moving up real quick. My ADX is still very low. If we get a very big red candle now, taps here, we're going to get a DI spike with a low 80x. That would be a trade I would consider taking. There we go. I'm going to take a buy on that 80x spike, because this is part of my strategy, and we do not doubt our strategy. We just take the trades it gives us. Does look like I'm going to lose this one, but it's okay. Might get saved by a retest. We've got 30 seconds left, 25 seconds left. So I might get saved by a retest. If price comes back and retests this area here, it's possible. I don't, might not happen. Or we could do that. There we go. Good trade. So this is the reason we stick to our strategies. We don't, and this is the advantage of having a very clearly defined strategy and being familiar with the parameters of the strategy. I don't have to think if the signal is wrong or right or wrong. I don't have to worry. I don't get excited if I get a signal and I lose a trade, because I know my next two will win again, or my next three. Even if I lose two trades in a row, sometimes it happens. I do know that my strategy is profitable overall. I don't get excited. I don't get emotional with my trading, and I get rewarded for waiting for my strategies to tell me it's time to enter the market. Okay, so we had another good trade there. We're still running about one every 10 minutes at the moment, so that's good. We're about half an hour into the video. Had two trades already. So yeah, let's see if we can find some more. Okay, so it looks like we're having some major volatility here. Let me check data quick. I don't think there's any data coming out soon. We've got a little bit of data at 11, and then 2:30 we've got the Canadian CPI. That's going to be, so if you're trading Canadian dollars this afternoon, just keep an eye on that. It's going to be half an hour into the US session, but we really don't have any data that's going to be affecting our UK session at all. Looks like price is holding for the moment. Above these moving averages here, 50 and the 100 looks to be holding. We could see price starting to move in an upwards direction. Interestingly enough, this spike here is the same area where it got rejected just now. So let's see if that breaks. I'm going to move this one up. So we've got this area here. Let's see if it breaks. Because we know if it breaks, and if it breaks properly, there's a chance we could get a correction and a retest then of this level here. So we're going to keep an eye on it. And then if we get an entry signal within the parameters of our strategy, we'll take a trade. the thing I'm definitely not going to do is take a trade as soon as it hits here, regardless of what, right? So there's no reason for me to believe that if price comes down, um, although this fact that it's flat here is a little bit worrying. I was hoping to see a decent push to roughly about this area though, and then a retrace to this area here, and then continuation. So if it happened that way, and we got the retest, this is a bit too close to my liking. I'm not going to get an entry on this, right? Because we're not trending strongly at the moment, but we should be continuing upwards. This level is broken, and price should be continuing, but I'm going to give it a minute. And if it does do a small retrace, and I get a hidden bullish divergence on the RSI or the stochastic, that will then be a confirmation of a buy trade for me. Until that happens, we're just going to wait and see what the market does. It is continuing upwards. I'm still not loving this area where it stopped here. So we've got some movement up. Now we need to see it's kind of like starting to arc. It could just continue pushing upwards as well, but I would like to see it arc just a little bit and then come down and do a retest here in this area somewhere. That would be nice. I'm actually going to say that there's a very good chance that this is going to happen. From here, it should come and bounce roughly around there. Right, so we're going to say from that area or from there, it doesn't matter. But if it does do a retrace, I'll actually suspect it will be roughly around this point here. Roughly. The reason I'm saying this is because my moving averages are moving upwards, because price is moving upwards, right? And very often there will be trade opportunities. Again, not always, but very often there will be trade opportunities when you got a strong support line, resistance line like this one, or a strong support line. You will see that when price starts moving, the area where your moving averages starts crossing that specific support line or resistance line area, that's usually where price comes back to. It happens often. It's not a rule. It's not that it's never a case of if price does come down now, I'm going to take it blindly. We will stay within the parameters of our strategy. We won't take trades outside, but at least now I know that I need to be paying attention to this, to what, if especially now that it's coming down, I need to pay attention because I might get a trade entry on my, via my strategy. And like I said, I'm not predicting that it will hit you. I'm saying that if it does retrace, it's likely that it will hit you. I'm not trying to predict what the price will do. I'm just trying to identify areas where I could get possible trade entries. Okay, so I have identified an area because of a very valid reason, and I will only take a trade if I get an entry on my strategy. If my one of my strategies gives me an entry, I will take the trade. But if they do not, it will not be a trade. So in this case, technically we do not have divergence, although technically we do. We didn't have a low there. And wait and see what happens. But this we did have a low, so there is no trade for me. But look how close we came to the spot. Right there. But like I said, it doesn't mean if the price comes down, I'm going to take a trade blindly, right? I'm still going to stay within the parameters of my strategy, because if my strategy is not giving me a clear trade signal, that means that market could go anywhere. I suspect it's gonna go up from here. I suspect this is just a retest, but I could be wrong. So unless my strategies tell me that very clearly that I can enter a trade at a specific point, um, unless they give me those signals, I'm not going to take any trades. And there's a good example why we don't do that, why we don't jump the gun. We didn't get a clear entry on any of our strategies. And if we did take a buy simply because it hit this area, we would have lost it. It would have been a bad trade, and we don't want that. Right, so we're going to stick to the parameters of the strategy. Even if you guys are using different strategies, it doesn't matter. The really important thing is whatever strategy it is that you are using, the most important part is that you understand the parameters of that strategy and that you are familiar with it and comfortable with it. That is the most important part. And this will apply to any strategy that you see anywhere online, or if somebody tells you, explains to you a strategy, it doesn't matter who it is. If I show you guys a new strategy and you're unfamiliar with it, you go and test it, you get to understand it properly, you understand the parameters of that strategy, and comfortable, use it on demo, see if it's profitable, right? Doesn't matter who's giving you the strategy, right? This is what you need to do. Always, if you are unfamiliar with something, that's the route to go. Never just take a strategy and jump on your live account and think you're going to start trading immediately and start making money immediately. I have been doing this for quite a while, and from time to time, people ask me to test something for them and whatnot. And I don't jump in on my live account ever. If I'm really unfamiliar with it, it takes a while to get the hang of a strategy, right? So it doesn't matter how experienced you think you are. If you get something new that you're not familiar with, you need to study it a bit until you understand it. Then you need to practice a bit, right? And that's the only way you're going to be able to use any profitable strategy. And most people don't do this, and then they lose money, and they get discouraged, and they think it's a bad strategy, and they throw it to the side, and they look for the next one. And like I said, these guys are always looking for new strategies, that magic golden strategy that's going to make them millionaires, but they're not putting in the work of actually learning and understanding the strategies that they want to use. Okay, so we are not getting entries here. We had a nice push, and now a nice retrace, a nice correction to there, and now it's flat. Flat market is a bad market. Doesn't matter what strategy you're using. Anybody trying to take trades when your chart looks like this is gambling. You're gambling. There's no way to tell. There's nothing that's going to tell you that price is going to go up or down from here. Nothing. We are not within. It's not close to a trend line. It's up and down above this area here that we drew in earlier. It's breaking below. It's breaking above. There's no way to tell what this is going to do. So the only thing we can do is wait. We don't trade. We don't risk. We wait for price to pick a direction. If it does, for example, make one or two big red candles and it hits here and I get my DI spike, absolutely, I'll take a trade because that's within the parameters of my strategy. I'm allowed to take that trade because this is what my strategy says I must do. Well, actually, there's no or. There won't be divergence forming here. There's nothing I will trust in it. Nothing else I would trust. I will only trust at the moment a very sharp spike. That although this 200 moving average is coming up way too quick now, so even a spike from this level down to here will not result in a big DI spike like we saw here. It will not result in that. So I think it's fairly safe to say that for the next few minutes we're not going to get any entries. We're going to have to wait until the market picks a direction and then starts going with it, and then we can really start looking for entries again. How long is this video? 45 minutes. Okay, so we're definitely out of the um, area where we're not doing a trade every 10 seconds, 10 seconds, every 10 minutes anymore. So that has become, we are out of that bracket. So we've had 2 trades, I think, in the last 25 minutes. So, was it 25 minutes? No, 35 minutes. We had 2 trades in the last 35 minutes. This is telling me that my strategies are a bit slow today. So the market conditions are not ideal for my strategies. I've got 2 choices here. And you always have these 2 choices when this happens. I can either be patient and ride out, keep watching and still play the entries that I get, the valid entries that I get. Or alternatively, what I do quite often, because I get frustrated if I watch a chart for 20, 30 minutes, especially a 10-second chart. If I watch it for 20 minutes or 30 minutes and I'm not getting entries, I get frustrated. So what I usually do, if for half an hour or so I'm not getting entries or just getting one entry, I'll close down my charts and go do something else. There's always something else to be done around the house. So even if you don't have anything specific to do, go sit and drink some coffee, read a book, browse TikTok, whatever it is you're doing. But take a break. If you get frustrated like the way I do when I'm watching these charts and I'm not getting entries, if you do get frustrated, just go do something else. If you don't get frustrated, then you are able to keep the control, keep the discipline, and simply wait for your entries. That's also fine. But the one thing that's we're definitely not going to do is we're not going to force entries. We're not going to start looking for excuses to take trades and take trades that are outside of the parameters of our strategy. That's something we're not going to do. Right, so we did not have divergence here. Those of you that's keeping an eye on this and might have wondered, we don't have divergence here. There's no DI spikes. We do not have a strong trending market, so the RSI strat is not valid at the moment because we are outside of the parameters there, and because we had a new low here from this low, and there's a new low there from this low, so that's not divergence. There's no trades at the moment. And this happens. You're going to get, I would say, doesn't matter really what strategy you use. There will be 1 or 2 days during the week where it's slow. We might actually have a trade here. Let's see if this, okay, it did break through. Okay, so why I said we might have a trade here is we had the big DI spike to this level here. If this gets rejected, it might actually be worth taking it. If the ADX of the DI turns down and we get a red candle, see it's hovering on this candle, on the line here. I'm not comfortable taking this, right? So there's a lot of indecision. And if you're not too comfortable with the trade or not too sure about it, if it doesn't feel, if it's touch or go, because what's the rule with this, with the DI spikes, we said it needs to hit and gets rejected and bounce off the support and resistance areas. This broke through, right? It broke through, it closed above, and then it did a small retrace. So if I did take a trade here, there's a very good chance I would have lost it, right? And this is what I mean with staying within the parameters of your strategy. Now, sometimes when your strategy is not giving you a lot of entries, you get something like this and you think, I'm going to take a chance. It's close. And it would have burned you. And this is why I keep hammering on the fact that we need to stay within the parameters of your strategy, and you need to understand what that strategy is. Whatever strategy it is that you're using, you need to understand and be vigilant to see to stay within the parameters of that strategy. We are This is a 50-minute video now. Obviously, it's a slow day. I don't think I'm going to look for any more trades now. I think, in case, like I said, in cases like this, I'm going to go do something else for an hour, at least, get the market to settle, see, and then I'll come back and see if my strategies are giving me a few more entries. Alternatively, what I'll do, on days like these, I'll switch to OTC charts. Get some trades in. I made a video earlier today on on OTC. It was like 3 hours before the UK market even opened. We did some good trades already. So sometimes if I really feel like trading in this, I really don't have much to do at that specific point. I'll switch to an OTC chart and just trade some OTC. But that doesn't happen too often, but it does happen. So yeah, I'm definitely going to do something else, but this is where I'm going to end the video. We are struggling with entries, although we might get spoiled here. Let's see. Okay, so the divergence failed. There's not going to be divergence at all, but we might get a retest of this area. Yeah, no, we're not gonna. Okay, no entries. So that's it for today's video, guys. Remember, some days are going to be great, some days are not going to be not so great. Today is one of those days that are not that great. We've been at it now in 40 minutes. So we're getting, right now at this very moment, we're running one trade every 20 minutes. That's like borderline limit for me. So I'm not going to be looking at the charts now for an hour or two, and I'll come back and see if the conditions has changed. If they haven't, I'll rinse and repeat, come back a bit later, or decide to give up for the day. It doesn't, either way, just be responsible. Stick to your strategies, even if you, if you do get frustrated, go do something else. Stop trading. Okay. All right, guys. I think that's it. Thank you for watching. I'll see you guys tomorrow, roughly around the same time, for another daily session, and hopefully tomorrow will be better than today. As always, trade safe, trade smart, and I'll see you guys tomorrow. Thanks for watching.